Hi, this is Zak Mir with the major markets on Thursday, the 3rd of March, and still on the bullish tack here for the FTSE 100, with the break of the former 61.15 February high. That became in as support later in yesterday's session for the UK index, and we're looking for an initial target here, the 200-day moving average 63.14, tying in with former December resistance around 63.15. And a best case scenario target towards 6400, 64.50 over the rest of March. Only really back below now the 10-day moving average 60.29 would be outright negative on the scenario here for the UK index. Next up is the DAX, and here we've had probably correspondingly better performance given the way that this market really did rocket going into the beginning of March. To 50-day moving average target 97.14. That was hit earlier in the week, and really what we're looking for now is consolidation towards 99.05, which was the last January peak, and then up to the 10,000 plus zone over the next couple of weeks. Stop loss on the bull argument at the moment right around 95.80, which was the old resistance area before the latest breakout, so that should come in quite nicely. And then we also have the RSI at 57, which is very much in the entry zone of the oscillator rather than on the exit side. As far as the Dow is concerned, well, this is really starting to look quite encouraging indeed. Beautiful hammer candle yesterday, Wednesday session for the Dow. And we've seen now a few of these. There was the first one in the middle of February, then another long one a few days later. So this is the third big hammer, and that really suggests that we're going to jump towards the 200-day moving average at 17,195 quite quickly over the next few sessions. RSI at 60, so definitely not overbought, and really only an end of day close back below the 50-day moving average at 16,535. A delay on the recovery or upside scenario here. On to the S&P, and here we've also got this strong consolidation yesterday above the former 1978 initial March resistance. Above that level, really, we should be heading quite quickly towards the 200-day moving average at 2024. Target after that is 2043, which is the top of that late December, early January gap to the downside. Stop losses in the case of the other markets back below the 50-day moving average at 90.38. Going on to the Nasdaq, and here you can see how really it was all about that trendline break from the end of December. That was broken really around the 4,200 level in the middle or towards the end of February. Break through the 50-day moving average at 42.73 is a very significant. Closed very well with that hammer candle for Wednesday's session, and really it should be an easy task for this market to head up to the 200-day moving average at 44.30 over the next few sessions. Stop loss back below the 50-day average 42.73, and that really is quite an attractive risk-reward trade, especially as the 200-day line is not expected to be a meaningful limit on upside for too long. Onto the currencies, and sterling back in business. Really, we seem to have got over our Brexit panic to some extent. We did have that bullish divergence in the RSI window, which has taken this market back towards the old 40.81 floor for January. Still a bit early to say that the worst is over, but we could still squeeze up to 142.50, which is this resistance line from February, as a best case scenario on an end of day close above the 40.81, 40.81 January floor, although I suspect the current price action is just a corrective one, and as soon as the non-farm payrolls are over, we will snap back to the downside, but we'll have to see how that pans out. On euro dollar, still a weak tone here. Basically hasn't really been the same since losing the 50-day average at 109.73. Last support on the way down 109.55, really well below that. It's difficult not to see some kind of attempt back towards 107.10, which was the initial support for 2016. Dollar yen quickly, and here a bit of a consolidation just around this 114 handle, expected to break quite higher today, up to say 114.80, 115, given the way that we bounced off the 20-day moving average level at 113.67. That looks encouraging already. Only really back below 112, a negative on the yen at the moment. And on to gold as the last market here. Here we've got great consolidation here above the 10-day moving average at 12.29. That's not suspected to break anytime soon, and really only back below 12.20. Let's say that's a 20-day moving average zone. A negative here. Beautiful triangle here, consolidation triangle, and that should snap to the upside relatively quickly and give us a $1,300 plus target over the next few weeks. That's it from me. More updates at the same time tomorrow.